Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Thursday morning. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. Good morning. I mean, it's one of those sessions where I guess we just have to wait and watch because the big data point is ahead of us and not behind. I mean, it's almost similar to last Friday's session. We were all waiting for that jobs number, and it did turn things quite a bit. It did move things around quite a bit. So this is one of those once again. Global markets are also quite ahead of that CPI number. Oil prices have cooled off. I mean, oil prices were knocking at almost three-digit levels, and they've pulled back from 98.5 to 92, closer to 92 now. That's a big positive. That's the biggest positive for India. It's also the biggest worry when it moves higher. Big moves in global forex markets. I mean, you know, what's happening with the pound, what's happening with the yen, which is now at a new 24-year low. So, I mean, it's all happening here. But I think for India, the big one are oil and, of course, later what happens with that inflation report out of the US, which may clarify next moves in the market. Guys, hi, good morning.
Hi, and did you know the biggest US market days so far this year have been either on the CPI days or on the Fed outcome days. So this is going to clearly be a big one. But we had our own CPI, inflation data, which came out yesterday. The inflation print for the month of September came in line with expectations at 7.4%. But remember, the RBI will be monitoring one more inflation print that's going to come out in October before it heads into its policy meeting in December. So inflation in the US, inflation in here. So you're going to hear a lot about that word, Nigel.
Well, that's right, Reema. But Prashant has been tracking the cues. Prashant, clearly we have a big queue that's coming up. Yeah. Overnight, I mean, there are still some headwinds. But as you pointed out, crude oil prices cooling off, a bit of a positive.
It's a big positive, Nigel, right? I mean, it trumps what happens to the dollar, what happens to global markets, because we import 80% of the stuff, right? Absolutely. It's not in our control. And when it moves lower, I mean, I think that is a big relief. Now, let me just quickly set this up. So all eyes, of course, on the US inflation number, which comes in. Remember, going into the inflation print, we've got the jobs number, which has been the unemployment, the underemployment numbers, etc., which have been stronger than expected, which means Fed stays higher for longer. We got the producer price index number yesterday, which again, the core number, ex-energy, food, trade, that is also hotter, which means that higher for longer. And then we finally come to this, the CPI number. Now, core CPI is what you want to watch out for. And I would say, all of the economists, if you read, they're all saying that we are expecting the actual number to be higher than our own forecast. So, I mean, it's a little bit of a ironical kind of situation. But Morgan is saying that, Citi is saying that, most brokers, global economists are saying we expect what the number will be to be hotter than what we are expecting. So I think markets are in a way prepared for that this is going to be an ugly number, this is going to be a bad number, which means the risk is on the downside. If the core CPI is below a consensus or even at consensus, which is about 0.4% growth month on month, it can lead to a temporary relief rally. It could be an aggressive move as well, depending on what Fed speakers react and say post the CPI number, because we've got a slew of Fed speakers also lined up, and most likely they'll react to the inflation number. So it could be an important one. I would say, given the positioning, if it's hotter than expected, it's sure markets can sell off. But US markets have been falling non-stop in any case. So risk-reward wise, I think the risk is perhaps to the downside. It's very unlike the situation in terms of the last jobs number. US markets had a bit of a relief rally, and you went into the jobs number in a slightly stronger fashion. Not this time around. So that's one thing. All right, Nifty here, just quickly coming back and circling back to where we are at. The Nifty has resistance around 17,260. This is nothing but three things. The 38% retracement of the fall from the September high to the September low. It's also the high yesterday. It's the high day before yesterday. So this is something you want to watch. And then you've got resistance at about 17,430, which is the next stop. Banks saw strong buying, and I mean, both private and PSU banks did well. The support there comes around 38,600. I mean, you're better off buying around these levels, but we'll see how markets open. If you get a dip at some point, I think that's a sort of sweet spot in that sense. Oil prices are down 6% in the last 4 trading sessions. And I think, from 98.6 down to back to 92, I think this gives us some cushion to deal with whatever comes our way from the US later in terms of the jobs number and market reaction, etc. This is working well so far. OPEC, for example, yesterday cut its forecast for demand growth and that also pushed prices slightly lower. At least something working in favor for global markets and, of course, big importers like ourselves. Nigel, what are you watching out for?
Well, the headwinds persist. But the sense that I'm getting is the bulls, they are up for a fight. And the 16,800 to 16,900 level, if that is held up, unless things really go wrong, I think the bulls are counting on that level, particularly holding out. The Nifty Bank, though, moving above that 50 DMA and trading above that, that's the key for the bulls. So those are the three big points that I want to put out. And the reasoning comes up for you. Institutions, yesterday they were net sellers to the tune of around 450 crores. The FI net sell number was around 500, 550 crores. The bulls will say, well, we can take that 500-600 crores of a net sell number. What are the FIs doing in the FNO market? Though in a live market, you had the Nifty open interest that was low and the Nifty went up. First signs of short covering on the Nifty. The Nifty Bank, that's been the rock. That continues to see fresh long build up. And just take a look at the FI data. On the long side yesterday, we had close to around 9,000 contracts on a base of around 25,000 contracts. So that told you that the long open interest went up by close to around 35% odd. And there was some mild short covering as well, though they continue to remain net short on the index, with close to around 81% of their positions on the short side. They bought puts in case things go wrong. There is some protection out there. But the biggest positive for me is that they wrote 60,000 puts, telling you that they're trying to make some sort of a base at lower levels. And the crucial support number comes in at around the 16,950 odd mark. A few reasons for that. 17,000 put saw a fair bit of open interest. The premium was around 50 rupees. So that's why 16,950 is important. A couple of other reasons in the last few days, well, we bounced off those levels. 16,950, 16,960 odd. So the broad range for the Nifty, the 20 DMA on the upside, if you can get past the 17,300 mark, you'll see a big bout of short covering. But on the downside, the 200 DMA, well, that appears to be a line in the sand. Resistance at around 17,300 to around 17,350. But the Nifty Bank, that's been the go-to index. And that, in fact, has support at around 38,500, 38,600. From there, we have seen big bounces. So I'm counting on that level holding out. But the real clincher for the bulls will come if the Nifty Bank can move above the 50 DMA. So the Nifty moves above 20 DMA, the Nifty Bank moves around the 50 DMA, then we could be off to the races. For starters, not such a bad thing that the SGX Nifty is indicating a bit of a pullback. I think at lower levels, if you could buy around 17,000, maybe you get a bit of a bounce considering the FIs are so net short on the index. Yeah, Prashant.
Nigel, I just want to say one thing. If you're trading, right, it makes sense to be quiet and sit on your hands, at least today, because the fact is things are oversold, and you pointed that out as well. Yeah. And data also indicates that. But sometimes, the point is when markets are oversold, this oversold business works or overbought business works in normal market conditions. Sometimes, oversold becomes more oversold, especially with all that is happening globally, right? If something breaks, we've seen what's happening in UK, we've seen what's happening in other. The Swiss National Bank, for example, has got a swap line for dollars with the US. It's got to. And that's a safe haven kind of zone, right? So if something breaks, it's possible things slide more. So, you may get it right if you go long and things reverse. But the point is, the first rule is to protect capital and not lose money. Yeah. So I would say, going into this one, at least, as markets close and then, intraday, of course, is another matter. But point is, into close, you want to go in light with the inflation number, which is, of course, due when US markets start to trade. That's a limited point.
It's a little tricky, actually, Prashant. Just one quick point. They wrote puts big time, and today's expiry as well. So you have a big data point coming up post-market hours, and also you have expiry. So things are going to get very, very volatile. Yeah, Reema.
Okay, but so far we've been respecting that range, and you go in, if you don't go in light and you take a position and it goes against you, you're going to be saying, why the hell did I just do that, But anyway, we're going to be talking a lot about IT as well, because yesterday post-market hours we got numbers from Wipro as well as HCL Tech, and no clear direction coming through. So in that context, Infy's numbers today are going to be important. HCL Tech has made a very strong comeback. Q2 numbers, a beat on all counts. They've gone ahead and upped the revenue guidance for this year. So despite all that talk about macro uncertainty, volatility, slowdown in demand, HCL Tech has gone ahead and raised the revenue growth outlook for this year, and valuations for HCL Tech are also fairly reasonable in the large cap pack. But Wipro, on the other hand, sounded very cautious. Even its guidance for the next quarter, that's the December quarter, and that's the only one which will give you a near-term outlook. They're just guiding for 0.5 to a 2% growth, much lower than consensus expectations. And even, when you heard into the conference call from the management, I chatted with the management in an interview, they sounded cautious on the consulting business. And in a way, this guidance bakes in the changing market reality. In theory, Delaporte's own words, the market today is vastly different from what it was a year ago. Analysts too have lowered the EPS estimates post this miss in Q2. The stock, remember, went up just towards the last hour of trade. It did see some buying. It was up close to about 1% by the close of trade. So let's see if a little bit gets shaved off today. But that's the picture on IT. Infi will be reporting numbers today. But let's get you some equity market